Welcome to IG's Trading the Markets podcast. This is an election special episode. I'm with Josh Warner today, the IG financial writer, discussing some of the stocks to watch in the week of the UK election, which is yet to be held. Josh, welcome.
Hello.
In terms of the markets as things stand at the moment ahead of the election, what's the message for those that trade the markets at the moment?
Yeah, so right now, there's quite radical policies in terms of when you look at the Conservatives and Labour, they're at polar opposites in terms of what they're offering in a lot of areas. So for investors and traders, that obviously injects some risk as we head into the election. However, there are some areas where there is some cross-party agreement in terms of what to do. So there are some stocks that are quite immune from this election.
Okay, you've split down your coverage into a number of different areas. Kick us off, first of all, with the area you think is of interest.
Yeah, so the first area that I've had a look at is the defence. So it looks quite immune. All the parties have said that they want to maintain spending on defence at least 2% of GDP. And there's also broad support for more UK shipbuilding and also the renewal of the Trident nuclear programme. So overall, this should be really good news for stocks like BAE and Babcock International. However, it's not completely risk-free. Labour and Lib Dems have also said they might consider banning arms exports to countries like Saudi Arabia, for example, which could have a knock on some of their earnings. But there is one area that is particularly strong, which looks like cybersecurity. So stocks like Sophos, which help protect the NHS from cyber attacks, could also benefit.
Okay, let's pick up on the second sector. That is housing. That's the second on your list. What about that in terms of the opportunities that could be available to those that trade this particular sector?
Yeah, so housing looks quite strong, although it's not completely threat-free. Underpinning it all is the huge supply deficit in the housing market. The country needs more housing, and the house builders will be at the forefront of that regardless. The one big benefit at the moment is that both Labour and the Conservatives have said they want to extend the Help to Buy scheme, which has been highly profitable for the industry. Although there might be some risks, Labour want to tighten the availability to people on ordinary incomes. And also they want to possibly introduce laws to make them utilise land more quickly rather than sitting on it for too long. So there is some questions about profitability going forward compared to recent years, but ultimately companies like Persimmon and Barratt and Taylor Wimpey have strong fundamentals to work off.
Let's move on to the next area, renewables. This is an interesting one because there are some quite definite views on the environment. Renewables are quite positive towards the environmental outlook.
Yeah, climate change is arguably one of the biggest topics this election, and all the parties have varying ambitions on how to get there. But overall, it should be good for any stocks involved in renewable energy. The Conservatives, who are probably the least ambitious on this front, have thrown most of their support behind offshore wind. Labour and the Lib Dems have support all sorts of renewable energy, from tidal to solar panels, etc. But I think if you were looking for something that looks set to get a boost regardless of who wins this election, it would be nuclear energy and also companies involved in hydrogen, as all the parties seem to be have a good stance towards those areas.
Are there any industries that look set to be worse off regardless of who wins the election?
There's a fair few. I think the one that's probably most at risk actually looks like the gambling industry. They've had a tough couple of years. They've seen the stakes on fixed odds betting terminals, which have become the main driver of revenue and earnings over recent years, reduced from £100 down to £2. And it looks like regulation is going to be overhauled regardless of who wins. The Conservatives and Labour have both said that the Gambling Act is unfit for the digital age. They do have slightly different priorities. Labour have said they would look at introducing further stake limits, so we could see that £2 go down to £1, for example. And the Conservatives have focused more on, banning credit card use, for example. So all in all, it doesn't look like a rosy outlook for companies like 888, JVC Holdings, William Hill, or Rank Group.
We spoke about renewables in the context of the environment. I know fracking is an area where already we've seen some what can only be taken as negative headlines. So I guess this is an industry we already know could well come off worse off after the election. What about fracking? I mean, much of these companies, of course, are off-market.
Yeah, I mean, right now, looking at the situation, there is no future for fracking in this country. The Conservatives sort of banned the practice just before the election and have said that they won't reinstate it unless they see new evidence that it's not harming the environment, etc. Whereas Labour and the Lib Dems have said they want to introduce a permanent ban and are very much against the practice in general. So it doesn't look very good for companies like Quadrilla, which, like you said, isn't publicly listed. However, its owners are, so it's worth keeping an eye on stocks like AJ Lucas and Riverstone Holdings.
The final area I know you've undertaken some detailed coverage of is social care.
Yes, so social care is quite a complicated area as we head into the vote. We know that demand for social care is rising, especially with the ageing population. However, the costs of providing that care are also soaring. The one thing that all parties seem to agree on is that it is unsustainable as it currently is. So the Conservatives, is quite interestingly, is probably the only area in their manifesto where they say they want to find a cross-party consensus to the social care crisis. But they've said the one thing they do want to really push through is to make sure that nobody has to sell their house in order to pay for their care. Labour take that one step further and say they want to introduce a lifetime cap on the cost of care for about 100,000. So when you look at the picture, the demand is going up and the need for social care is always going to be there. However, there's going to be big questions about profitability going forward, especially with all the parties looking at different ways of addressing the problem.
Josh, we'll have to leave it there, but thanks indeed for joining us with a quick scoot round some of the areas which could be of interest as a result of the elections this time around. That's IG's Trading the Markets podcast, the election special.